Good morning. This is Larry McMillan with the stock market update, recorded Monday, February 7th before the market opens. So last week we saw a pretty strong rally in the S&P, but it was still a bear market rally in that it rallied back to its declining 20-day moving average and then basically failed there. So if you look at the S&P chart, you'll see three separate peaks, and you can draw a downtrend line between them. And that's negative in general for the market. So as long as that downtrend line is in place, caution is advised. We do have a McMillan volatility band buy signal that occurred in the middle of last week, but that can sometimes take a little while before it gains traction. We've seen the put-call ratios get very oversold, and in fact the standard ratio is still getting oversold, but the weighted ratio has rolled over to a buy signal now, so that's going to be helpful in the near future here. Breadth oscillators, however, have not kicked in. They're still on sell signals. There was a little head fake at a buy signal last week, but that didn't really materialize, and so breadth remains a problem for the market. In a similar fashion, new highs versus new lows is still quite negative as well. We're seeing about 300 more new lows than new highs in all the data sets right now. So that's also another negative. As far as volatility goes, the VIX spike peak buy signal is still in effect from January 24th. However, the trend of VIX is beginning to build upward momentum. VIX is above its 200-day moving average, and so is the 20-day moving average also above the 200-day. So that combination is bearish. It indicates a generally rising VIX. The 200-day moving average itself is also beginning to curl upwards. So as long as this bearish trend is evident in VIX, that also advises some caution. The construct of volatility derivatives, however, is back on the bullish side in that the VIX term structure is sloping upwards, and the futures, for the most part, are trading at a premium to VIX. We had a nice seasonal pattern. We had a negative seasonal in the middle of January, and then a positive seasonal at the end. But now we don't have the backing of the seasonal trade any longer, so the market's on its own in that regard. We are expecting that we'll see buy signals from some of these oversold indicators, and we will trade them. But we are still going to retain a cautious attitude because of the downtrend in SPX and the uptrend in VIX. So I invite you to visit our website, take a look at our newsletters where we discuss all these indicators daily. Meanwhile, good luck and good trading.